So welcome to this video. In this video, we are going to discuss about management accounting and what are the uses of management accounting, and also about its advantages and limitations. So management accounting is a separate subject. It's not like it's like quite similar to cost accounting, okay, but it's not as same as cost accounting. And management accounting is very much different from financial accounting. So we'll be like discussing these things in detail in this video. So we'll start with the official definition of what is management accounting. So CAMA is the a top body for management accounting. So they have given a definition like the process of identification, measurement, accumulation, analysis, preparation, interpretation, and communication of information. Okay, so what are the works done by a management accountant is he finds out what are the information required. With that information required, how he could uh, help the company to operate better. Okay, so he identifies the information, he measures it, he collects the data, he analyzes like what is happening with the data, and then he prepares management accounting reports and he communicates that to relevant users. Okay, so this information is used by management. Okay, it's used by the management. So mostly management accounting is internal to the company. Evaluate and control within an entry, so and to assure appropriate use of accountability for its resources. Okay, so management accounting helps to create plans and find out how the plans are working, and how to control those plans. Okay, so all these things are helped by management accounting here. Management accounting also comprises the preparation of financial reports for non-management groups such as shareholders, creditors, regulators, and tax authorities. So predominantly management accounting is used only for the management of the company. Okay, so the internal parties of the company. But in rare cases, they also create reports which are useful for shareholders and creditors. For example, shareholders, management accountant help in preparing environmental reports, okay, or CSR reports, or corporate social responsibility reports, or integrated reporting, like that. And for creditors, uh, how much cash the company has, whether it could make the payments in a proper way, like that kind of assurances, okay, that could be made by the company. Any assurance to be made, we need information, right? Company needs the information, so those information will be supplied by management accountants. Okay, in the same way, they can also help in regulatory agents and tax authorities. So management accountants are usually not involved in the preparation of in the direct preparation of financial reports, but they are helpful in preparing other management related items. Okay, something like CSR report, environmental report. Okay, that kind of reports they are helpful in creating also. Okay, so where is this concept of management accounting is helpful? Assume that you are studying a course, something like CAMA or CMA. Okay, or in India you have CMA. So there are like many courses here. So if you want, I'll just type it. CAMA is in UK, and CMA US is there, and there is also in India we had earlier called a CWA, Cost and Works Accountant, which is in India, but now they have named it as now they have named themselves as CMA only. They have named themselves as CMA. So all these bodies are creating management accountants. So their predominantly purpose is to create management accountants. So what do management accountants do? See, management accountants help in all these kinds of areas. So, for example, a company wants to price. So, pricing a product is not such an easy thing. We can't just copy our competitor and we can't price, right? We can't do like that. We have to find out a lot of things, right? So, for example, to price our product, we need to see what is our cost and what is our competition. Okay, what is our competition? We have to get what is our profitability percentage that we want, what is our margin. Okay, and we need to find out what is the price the customers are willing to pay. Okay, and what are the features that our product offers in terms of the in terms of other products. Okay, so we need to analyze all these things before pricing a product. Okay, so that is a like very important concept here. So the second one is called as break-even analysis. So break-even analysis is helpful in determining at what unit the business neither makes profit or loss, or in simple case, when the companies will make zero profit. Okay, so break-even analysis helps a company to find out at what level the company makes neither a profit or a loss. So why should we find out this? See, we should find out this because if we are able to produce, if you are able to sell more than that units, for example, if BEP units, if BEP units is going to be 1000 and we can sell, okay, our sales can only be done up to 900 units. See, then that kind of product should not be like considered to be produced at all, because to reach neither a profit or loss you will take 1000 units, and if you are producing only, and if you are able to sell only 900 units, then that kind of a product should not be sold. Okay, any unit sold lower than break-even point is a loss. Okay, so if you can sell only 900 units, it will lead you to a loss. If you can sell 1100 units, that will lead you to a profit. Okay, that will lead you to a profit. So you can even put it in a simple case like this: even if you sell 999 units, you will make only loss. Even if you sell 1001 unit, you will make a profit. Okay, if you sell 1000 units, you will either make a profit or loss. So this kind of analysis is useful in many cases. For example, you are opening a coaching center. Okay, you want to open a coaching center. So when you want to open a coaching center, you have to pay rent, you have to pay electricity bill, you have to pay the teacher salary. So all these things you have to pay. So assume that rent comes to 5000 and the electricity bill comes to 2000 and teacher salary comes to 10,000. Okay, or 13,000, we'll put as 13,000. So our total fixed cost, okay, our total fixed cost, see, we don't have any other cost other than this, so the total cost comes to 20,000. And if the price per student, or the fee per student, is going to be around 1000. Okay, then with 20 students we need to break even. The break even point is 20 students, because if we get less than this, we won't make money. If we get more than this, we'll make good money, right? So if we have 21 students, if we have like, what would be our sales? Our sales for, so if the company has 21 students, they will make around 21,000, right? The company will make 21,000, and if the students are going to be, and if the sales is going to be 19 students, the company will make 19,000. Okay, so at 20,000 they will break even. Okay, they will equal this cost, they equal this cost, and at 19 students they will make a loss. At 21 students they will start to make profit. Okay, so break even analysis is like quite useful here. Okay, it's like quite useful. So next we'll move on to what is a key factor analysis. So key factor analysis is it's a quite different concept here. So I think we can discuss this in a topic when we deal about key factor. Okay, here we can't explain it a lot. The next one is product profitability. So each product has a different profitability. So assume that there's a cycle company. The cycle company will usually have different cycles and they sell the cycles at a different price. Okay, so they have a different cost and they have a different price. Which cycle is the most profitable? If you want to find, you, it's called as profitability, product profitability. Okay, so usually so usually uh, so usually financial accountants will not have that data. Financial accountants will have only collect data and they will store it. Okay, so to analyze it we need a management accountant. So the next one is cost benefit analysis. So cost benefit analysis is used in terms of not for profit organizations. So in India we call it as NGOs, okay, non governmental organizations. Okay, in abroad they call it in the terms of not for profit organizations. Okay, so not for profit is a better term than NGOs. So not for profit is, we can find out like uh, we can't find out the profit of a company because they don't, their profit is not their element or their main aim. So what we do is we try to find out what's the relation between the cost spent by the organization and the benefit that this organization gives out. Okay, so for example, if you take Blue Cross, okay, Blue Cross is for dogs and for all the animals here. Assume that they're going to construct a shed for horses. It's around 1 lakh. So because of constructing this, what is the benefit? What is the benefit here? So they could have constructed a shelter for horse, or they could have provided some water facility for all the animals in the area, or they could invest this in better IT systems in the company. So they could have invested in all these. But the question mark is, what is the benefit of all these? Okay, what's the benefit? So if the company just has like 1 lakh, okay, if the company just has 1 lakh, they have to invest any one of it only. Which one is the most ideal? Whichever one gives you the highest benefit, you can put the money there. So if shelter is going to only help the horses and only few horses are there, and IT systems are not that required for the company, then they could go for providing the water. Okay, so that could be the ideal thing here. So they might go with the providing water facilities for all the animals in the place. Okay, see here it doesn't work like a company, because companies usually have the profit, and companies, what they do is they try to find out what's the profit for each of these projects. So companies will try to find out what would be the profitability. So profitability, wherever it is high, they will do it. Okay, so they have the measurement of profit, but for not for profit, they do not have the measurement of profit. So they have to depend upon the maximum benefits only. So that's about cost benefit analysis. Cost volume analysis, we have to see it later. Client profitability analysis is each client, okay, similar to a product, okay, every client is also differently profitable. Okay, some clients are highly profitable, some clients are not highly profitable. Some clients require more service and some clients require less service. Okay, so we can put it like this. Assume we have different types of clients. Okay, we have 1 2 3 4. Okay, we have 4 types of client, and the fee that each client pays is going to be like 100. Okay, it's going to be same 100, and the cost required to service these clients, okay, in terms of customer care cost, emailing cost, or some other additional cost, is going to be different. For example, for this guy it's going to be 50, he's going to be 80, he's going to be 95, and this guy is going to charge around some 40. Okay, so this is our cost. So different customers require different service, right? Different kind of interaction and service they require. So if you take the profit for the client 1 would be 50, here it's 20, here it's 5, and last it is 60. Okay, so now what you could do is, okay, if you want to cut off any client, or if you want to like minimize cost, simply you don't service client 3. Okay, don't service client 3, because all he gives you is only 5 rupees extra. That's a profit, and because of serving him, okay, we are incurring a lot of expense only. So Better don't serve client number 3. Okay, just stop serving him. Okay, because if you see the total income is 400 and the total expense is 265 and the total profit is 135. If we stop serving this person, okay, all that we lose is only 5 rupees of profit, but how much of cost we will save is we will save 95 of cost. Okay, so don't provide service to this guy. We could provide him service in case we don't have any other client. Okay, but the maximum clients that we could serve is only 4, and we have an opportunity to serve another client called as client number 5. Okay, he's coming there as a new client, and the maximum cost you'll incur is 50, so we'll only have another profit of 50 means don't, and you can maximum service only 4. So stop this client and take this client as your new one. Okay, so this is called as client profitability analysis. So we have capital budgeting, I think we'll say later. Also even in terms of buy and lease. Okay, so buy and lease decisions are also helped by management accountants. For example, whether a machine should be bought or leased. Okay, that kind of decisions also management accountants help. They help in sales forecasting. So the sales department will give the data about what would be the sales, and management accountants will try to forecast how it could be in the future. Financial forecasting, they also help in budgeting for the entire company. They try to control the cost through standard costing and performance measurement, how the company is performing, how the department is performing. That and all we can measure through management accounting. You would have read something called as a ratio analysis in your college or even in your school, ratio analysis. So ratio analysis is a very important concept with which companies measure how the management accountants measure how the company is performing. Okay, so then we have relevant costing, we'll see this separately. Risk and uncertainty in divisional performance measurement, division wise how the company is performing, and in transfer price. Okay, so transfer price is very advanced topic, we can't see it here, we could see it in another video. Okay, so what's the difference between management accounting and financial accounting? So why information is mainly produced? See, the management accountant information is mainly produced for the sake of internal use for managers and employees, and financial accounting is prepared only for the sake of shareholders, creditors, banks, and governments, for external people. The purpose of information management accounting is required to help in planning, controlling, and decision making. Financial accounting is useful for finding out what is the profit for the period and what is the assets that we have and liabilities we have at the end of the period. See, legally, management accounting is not required, it's only optional, and financial accounting is compulsorily required because it is, if you are a public company who has got people's money inside the company, then they have to create financial accounts. See, there is no, in terms of format, management accounting does not have any particular format or anything. So you can prepare in one manner, okay, your friend could prepare in another manner, provided it helps the ultimate objective, it's fine. Okay, so every company has its own style of management accounting. The format for for financial accounting is quite given. Okay, so that is like in India you have Ind AS, okay, Indian accounting standards. Globally you have IFRS. So you have in India you have Ind AS. So globally, if you take globally, you have IFRS, and in US you have US GAAP. Okay, so you have, each country also might have their own accounting standards. Okay, and the companies have to prepare the financial accounts only on that terms. So nature of information capture in management accounting is both financial and non-financial. So it can capture currency value. Okay, for example, like 100 kgs of raw material bought at 10,000 rupees. So it can capture both the 10,000 rupees, okay, as well as the 100 kgs. But financial accounting will capture only the rupees, okay, or the dollars. That alone it will capture. It cannot capture 100 kgs at all. Okay, so that's the drawback for financial accounting. And the time period is, usually management accounting takes the historical data and it tries to predict the forecasted data in terms of budgeting, okay, or in terms of even in this case BEP, this kind of break-even point analysis and all. We saw that we took old information to predict the future information. Okay, so that's about management accounting. Financial accounting is mainly historical. It's only a record of all the old information. Okay, so that's about the concept there. So now we could move on to what's the difference between management accounting and cost accounting. So this becomes interesting because if you take textbooks, mostly what they will do is they will combine both these subjects together, cost and management accounting. But international authors and very good authors, they make a split between management accounting and cost accounting. There's usually a huge difference. Okay, so what is cost accounting? Cost accounting is there to find out what's the cost of creating a product or service. Okay, see, management accounting is more than that. It tries to find out what's the cost of a product, at what price it could be sold, okay, how the company should be planned and how the company should execute its plans. Okay, in all manners management accounting will help. Cost accounting cannot do that. See, format, in cost accounting there are some standards. Okay, cost accounting standards are there. For example, in India we have CMA or CWA. Okay, they have changed the name. Earlier it was CWA, now it is CMA. So they have issued something called as cost accounting standard. Okay, cost accounting standard they have created. So they follow that kind of rules. In management accounting there's no rules like that. Okay, nature of information is, in cost accounting it captures both the kgs, okay, liters, hours, as well as the cost of it. Okay, 10,000 rupees like that also. But if you take financial account, management accounting captures financial, 10,000 rupees like that. Quantitative, 100 kgs, 100 liters, 100 hours like that. It also captures qualitative. Okay, what is qualitative? See, qualitative is uh, uh, something like opinion. Okay, opinion, customer satisfaction survey. Okay, whether they have given a high satisfaction or a low satisfaction, that is something qualitative. Okay, see, or 10,000 kg, 10,000 rupees of raw material, 100 kgs of raw material, and high quality raw material. This high quality or low quality can be captured in management accounting, but cost accounting doesn't bother much about that. And next one is time period. So cost accounting captures the old and it tells you what is the cost of the product or what's the cost of the service. That's what cost accounting can tell. But management accounting tells historically what this is, what's the cost, this is what the cost is being incurred, and this is what will happen in the future. Okay, so it's like three phases of time. So the next one is scope. So scope is, cost accounting is mainly about finding out the cost and controlling it. Management accounting is like much wider: budgeting, pricing, standard costing, tax planning, reporting to management, and all techniques. Okay, and all techniques of planning and controlling. So now we look at like what are the knowledge required for management accountants. Okay, so to do management accounting properly, we need to have an idea about what is financial accounting, what is cost accounting, what is financial management, little bit of statistics, little bit of engineering, little bit of again taxation. We should know a good deal about information systems, like how Tally is operating, how an MIS is operating, or how an ERP system is operating. We need to have a good idea about that. We might use a little bit advanced statistical techniques like called as quantitative techniques. Okay, we might use it. So these things are the requirements for management accountants. Okay, see, depending upon the position and depending upon the information requirement, the importance of these items will change. Okay, so it's not that all of this are required to make a management accountant, but an idea about all this is like essential. And depending upon the particular role, the importance of each and everything will differ. So now we look at what are the benefits of management accounting. So benefits are, so the benefits of management accounting are, we can make better decisions. This will increase the business efficiency. We can understand our financial statements better because we know like how our costs are incurred. We know how the sales has to be made. So it helps in a lot of better understanding of financial statements, understanding of cost behavior. So there are like different types of cost. We have already seen this in cost accounting videos. So there are costs like variable cost, fixed costs, and semi-variable cost, and we even have something called as a stepped cost, okay, or stepped fixed cost. Okay, so there are different types of costs, and how these costs interact in a company will be better understood in cost accounting as well as in management accounting. So understanding of the cost and the sales will help in profitability. So we can understand what is the motivation level of employees. We can do a survey. We can find out through attrition rate or number of employees quitting the company. Through that we can find out how the employees are like motivated. We can make proper planning, we can make measurement, and it improves service to the customers and effective management control. So these are the benefits overall. Let's see what's the drawback of this concept here. Okay, management accounting. One, there is no standards. Similar to financial accounting, we don't have standards in management accounting. Lack of knowledge and understanding. See, there are the problem with management accounting is like a nice concept, but the people who use management accounting should be like well versed with it. Okay, they should be an expert in it, or else we won't get the benefit. So collecting information, storing it, processing it, and giving information is costly. So creating a management accounting system itself is costly by nature. Subjectivity by user. So the user has to finally make the decision. Management accounting will not give the decision. Okay, it will only give the information. So the user only has to take the decision. See, again, it's not a substitute to decision making. Okay, it helps in decision making, but it's not a substitute. And most of the management accounting analysis are based upon financial and cost records. So if this financial and cost record is not that great, or if it's like not a proper data, then management accounting also can be a wrong information. Okay, it can also give wrong analysis and suggestions. So resistance. So any suggestions given by management accounting will not be like taken up by staff. For example, management accounting might say that it's better uh, to cut 10% of the staff. Okay, but that might not be like quite possible, because like the other 90% of staff will become demotivated. So we have to consider that also. And management accounting is an evolving subject. It's not there been for last 100 years. Okay, it's a only recently emerged or a developed subject. So, or a developing subject. So we are not in that stage of uh, full understanding of that subject. Okay, lack of continuity and coordination. See, the benefits of management accounting is only when you keep on applying it. Okay, so that's about the concept here. So we'll now move on to uh, this topic. So for this topic, we have a case. So it's called as changes in the role of management accountants. So management accountants role has been changing over the period of last 20 years. Okay, why it has changed and in what way it has changed, we'll see now. Number one, see, there are people called as Burns and Scappens. So they have made a study, and they say that the role has changed focus from financial control to business support. So earlier they were like management accountants usually focused more on cost controlling, but now they are helping in pricing decisions, break even decisions, okay, product profitability decisions. So there has been a shift. Okay, making the management accountant a more generalist. So he is not sitting in one department and spending time. He has moved towards supporting every department. Management accountants may now spend much of their time as internal consultants, and although they still produce standardized reports, more time is spent in analyzing and interpreting information rather than preparing reports. So see, reports are now prepared by computers itself. It's all about the management accounting accountant sitting there and analyzing like what has happened. Okay, so his role has like shifted because of the computers. His role has shifted. This new role has been called a hybrid accountant, since the management accountant has a valuable combination of accounting and operational and commercial knowledge. Okay, so see, so management accountant can help any other department. It can be a purchase department, or it can be a production department, or it can be a sales department, okay, or advertisement department. So whatever department is there, he could contribute his knowledge. Okay, he gets information from these departments, or else he actually gets information from the ERP. Okay, ERP is a software. From software he gets information. Okay, and with that information he helps these departments. So that is what is called as hybrid accountant. So partly he has management accounting information, and other part he should also have some basic idea about these departments. So the last one is, traditionally it was thought accountants needed to be independent from operational managers in order to allow them to objectively judge and report their accounting information to senior managers. However, today accountants do not necessarily work in separate accounting departments, but may be fully integrated into other departments, thus playing a key part in the operations and decision making process of the department. So management accountants now work along with these departmental managers. Okay, so management accountant will not work separately in an office, he will work along the managers, other managers. So he provides more information, insight and knowledge to the other departments. Okay, so this is the new role of uh, the management accountant. Okay, he helps in strategic decisions, he helps in business strategies, he helps in risk management, he helps in the usage of financial and other resources, how to use them, he helps in improving the business, he helps other managers to think from the financial angle. For example, the advertising company will only think in terms of how creatively the advertisement is. Okay, but advertisements should also be not only be creative, they should also stimulate the sales, and creating advertisement is also a cost. So this cost aspect a lot and all. Okay, right? So advertisement department will think about the creative only. So this, what would be the increased sales and what would be the cost of that advertisement and all, management accountant will sit and think about it. Okay, so he works in with other departments. That's why they say liaise with other managers to put the finance view in context. So they also train other managers in managers in terms of finance on accounts. They identify the changes required in products. They also work in cross-functional teams with new product development. So if a new product is developed, management accountants are required to find out what would be the cost of that product, what would be the price for it, appropriate price for it, and what would be the profit for it. So even for new product development, they are there to help. Okay, they are there to help. So that's about the role. So what is causing the changes in management accountant's role? Okay, so management accountant's role has moved to much more better kind of role. So the number one is, the management structure of companies have changed. Okay, so earlier it was more centralized, so the top management took all decisions, but now top management gives lower management and managers to take decisions. So there is a shift from centralized decision making to decentralized decision making. Okay, the second one is technology. Earlier, records and everything was kept in paper, so creating reports itself was a headache. But now MIS has all the records and reports. What we need management accountant now is to interpret that reports. And last is competition. So competition has become so much powerful now. We cannot think in terms of reactively. Okay, we have to think proactively. How our company should be better than the other. Okay, so the job of management accountant has also changed from focusing on reducing cost to focusing on improving sales, improving competitiveness of the company. Okay, So this is the total theory for this chapter. What we'll do now is we'll apply these concepts to two case studies. Okay, so first case study is going to be the role of management accountant. Okay, so this question was asked in ACC exam in 2012 December. The company name is called as Herman Swan, and this is the question that they have asked. Describe the changes in the role of management accountant based on Burns and Scapin's work. Explain what is driving these changes and justify why they are appropriate to HS. They are given 13 marks. So how we have to break this? See, the first part of the answer is just a general answer. Describe the changes in the role. Okay, how the role has changed. Okay, so how the role has changed, we already saw here. We already saw here how the role has changed. Okay, so this is actually the answer for the first part of it. So we can actually copy this if you want. So this is the answer for the first part of the question. So we'll think about the second part of the question. So the second part of the question is explain what is driving these changes and justify why they are appropriate to HS. Okay. So what is driving these changes? So that's a one part of the question, and then uh, why they are appropriate to HS. Okay, so these are the major two elements that we have to think about. So we'll start. So what is causing the changes in the management accountant role and why it is important to this company? Okay, so we'll start. You can read along. If any point is required or it's like important, then I will take those points and I will put it in the answer development. So you can just follow the cursor. Okay, so this is just an intro paragraph about what is a company. So still they have not told us what changes are occurring in the company and why it is important for HS. Okay, so this is just a background information. Background information are very useful because with that only we can write an answer. Okay, so we'll start again. So for this company, the heritage, the value, and the quality are the main aspects. Okay, so they have to focus on that. So let's see here. Okay, so is there any cost to for the management account role to change is competition. See, competition is intense. Okay, competition is intense from from global from global luxury brands. Okay, so that is actually a big thing, which is like the company has to shift. Okay, they have to compete with them. So to compete with them, they should have better information and better management accounting. Okay, so this leads to competition. Okay, leads to okay. So that's why it is like appropriate to this company. Okay, so we'll go to the next thing. So here it is. Okay, there are two things which are changing here. So one is going to be the technology. So the technology is changing. So technology is HS company has has adopted new MIS. Okay, they have adopted new MIS. So because of this, so we'll put management accountant as MA. Management accountant has okay. So management accountant has easier access to information and records. The only thing that he has to do is he has to prepare better reports and help other managers. Okay, so that's about what this paragraph told. Let's go to the next paragraph here. Okay, so if you read, you can find out that the management structure is changing. So movement of power from head office to SBU. Okay, so the power is moving. So because of that, okay, so management accountant. Okay, so management accountant has to use the data to provide insight to the SBU managers. Okay, so that's what this paragraph tells. So let's go to the next one. I think this one we have read. We have to go to this one. Okay. So see, the question asks you, I think up to this point we can have the answer. So up to this point, okay, you could find out that this is what is driving the changes, okay, where the management accountant has to change. These are the factors which are changing. And once it has changed, this is how his role will change, okay. So these are the factors which are driving the change, and these are the roles which are going to change for the management accountant, okay. So that's about this question. We'll move on to the next case.